Welcome back to Report of Silver. I'm glad you're here because today we are discussing a major geopolitical development that could completely change the direction of the precious metals market. The headlines are now focused on the possibility of a reopening of the Strait of Hormuz and a possible peace agreement involving Iran, the United States, and several regional powers. At first glance, many investors would assume that peace in the Middle East would be negative for gold and silver because traditionally safe haven assets often react positively during conflict and negatively during peace. But I believe the market may react very differently this time, and that is exactly what we are going to break down today. My view is simple. If this agreement holds, gold and silver could actually move significantly higher.
That may sound counterintuitive, but when we analyze the relationship between oil, geopolitical stress, inflation expectations, and recent precious metals behavior, the logic becomes much clearer. Before we go deeper, if you enjoy daily analysis on gold and silver and want clear explanations without the noise, make sure you subscribe to Report of Silver and join our growing community of investors and stackers. I post content daily, and my goal is to help you stay ahead of the market by understanding not just what is happening, but why it matters. Now let's start with the biggest headline. Reports suggest that former President Donald Trump announced that a major agreement has largely been negotiated involving Iran and several allied nations. According to the reports, conversations included leaders from Saudi Arabia, United Arab Emirates, Qatar, Pakistan, Turkey, Egypt, Jordan, and Bahrain. That is a very large diplomatic coalition, and when that many countries are involved, markets immediately begin pricing in lower geopolitical risk. The key phrase here is subject to finalization, which means the details are still unclear, and as investors we know that details matter. Markets often move first on headlines and only later react to reality. One of the most important details is the possibility that the Strait of Hormuz could reopen fully and safely. This is not just another shipping route. This is one of the most strategically important energy corridors in the entire world. Roughly 1/5 of global oil supply moves through that narrow waterway. When it is threatened, oil prices surge because traders fear supply disruptions. When it reopens, oil markets typically breathe a sigh of relief. That relief often sends crude prices sharply lower. At the time of this analysis, oil had recently traded near $97 per barrel, and if confidence returns, we could easily see that price fall toward the mid-80s. That would be a major move. Now here is where things get interesting for gold and silver. Normally, lower oil prices can reduce inflation fears, and that might seem negative for metals, but that is not what we have been seeing recently. Over the last 80-plus days, markets have behaved in an unusual way. When oil moved higher, gold and silver often weakened. When oil pulled back, precious metals found strength. That is the opposite of what many investors expect, but markets do not always follow textbook logic. Sometimes they follow positioning, sentiment, and capital rotation. That is what I believe is happening now. If oil drops because the Strait of Hormuz reopens, capital may rotate out of energy and back into precious metals. Why? Because investors are still deeply concerned about inflation, debt, currency weakness, and long-term monetary instability. Those issues do not disappear just because one geopolitical conflict cools down. In fact, lower oil could give investors confidence to buy metals again because it removes one major short-term risk while leaving all the long-term bullish fundamentals intact. That is why I believe this headline, if confirmed, could be surprisingly bullish for both gold and silver. Silver in particular may react more aggressively because it has been trading with extremely high volatility. We have already seen how quickly silver can move several dollars in a single session. If confidence returns and money rotates into metals, silver could be one of the biggest winners. Gold may rise steadily, but silver often moves with much more force. That is why so many experienced investors keep their eyes on silver first when these macro shifts begin. And remember, this is only the beginning of the story. The announcement sounds positive, but this situation remains fragile. One wrong move, one broken promise, one attack on a tanker, and everything changes again. That is exactly why markets will remain highly sensitive, and why the next few trading sessions could be extremely important for precious metals investors. The biggest immediate effect of a reopening of the Strait of Hormuz would be on oil, and that is where we need to focus first, because energy is the first domino in this entire story. For weeks, oil traders have been pricing in risk. They have been pricing in the possibility that shipping lanes could remain disrupted, that tankers could be delayed, and that military escalation could shut down a major portion of global energy supply. That fear pushed crude prices sharply higher, and anytime oil starts moving toward the $100 per barrel level, it immediately creates ripple effects across the global economy. Transportation costs rise, manufacturing costs rise, inflation expectations increase, and central banks become nervous. That is exactly what we have been watching. Now imagine that pressure suddenly easing. If ships begin flowing normally again through the Strait of Hormuz, traders may immediately start removing what is called the geopolitical premium from oil. In simple terms, that means part of the current oil price is based purely on fear. If fear disappears, that premium disappears too. That could easily mean a move lower of $8 to $10 per barrel in a very short time. If crude is sitting near $97, suddenly we are talking about oil dropping toward $87 or even $85. That is not a small move. That is a major reset in expectations. Many investors would immediately assume that lower oil must mean lower inflation and therefore weaker gold and silver. That is the traditional way of thinking. But markets have not been behaving traditionally lately. Over the last several months, we have seen a strange pattern where gold and silver have often moved opposite to oil. When oil spikes, precious metals have sometimes sold off. When oil weakens, gold and silver have found buyers. This tells us something very important. It tells us that the market is currently treating oil as a short-term fear trade, while gold and silver are being treated as long-term monetary protection. That distinction matters. If oil falls because of peace, that does not suddenly solve government debt problems. It does not solve currency devaluation. It does not stop central banks from printing money or managing interest rates. It does not erase inflation that has already been embedded into the system over the last several years. Investors know this. They understand that lower oil may temporarily reduce inflation pressure, but it does not fix the structural reasons people buy precious metals in the first place. This is why I believe gold and silver could benefit from this event instead of suffering from it. Once the market feels less fear around oil and war, money may begin rotating into assets that offer long-term protection and opportunity. Gold is the traditional destination for that type of capital, but silver often becomes the bigger story because it moves faster. Silver is more volatile, more emotional, and more reactive to sudden shifts in investor sentiment. That is why a relatively small amount of capital flowing into silver can create a very large price move. And there is another factor here that many investors overlook. Industrial confidence improves when peace increases. Silver is not only a monetary metal, it is also an industrial metal used in electronics, solar panels, defense systems, and advanced manufacturing. If global markets believe supply chains are becoming more stable and trade routes are becoming safer, that supports industrial demand expectations for silver. So silver has a double advantage here. It can benefit as a precious metal and as an industrial commodity at the same time. That is one reason why I believe silver could outperform gold if this situation develops positively. But we have to be realistic. This agreement is still extremely fragile. One drone attack, one tanker incident, one political miscalculation, and the entire narrative changes instantly. If that happens, oil jumps back above $100, fear returns, and market volatility explodes again. That is why traders will not fully trust this headline immediately. The first reaction may be powerful, but skepticism will remain. We could see gold and silver surge, then pull back, then surge again, as markets try to figure out whether this peace is real or temporary. That creates opportunity, but it also creates risk. This is not a market for emotional decisions. This is a market for disciplined analysis. And right now, the relationship between oil, geopolitics, and precious metals is one of the most important stories investors need to understand. The next few days may tell us whether this is the beginning of a major breakout or just another short-term headline in an already volatile year. Another important factor investors must understand is the political fragility of this entire situation. A possible agreement involving Iran sounds positive on the surface, and markets usually love headlines that suggest peace. But markets also know history. This is not the first time the world has heard that negotiations were progressing or that a breakthrough was near. We have seen these moments before, where optimism briefly enters the market, prices react quickly, and then within days, everything changes because one side walks away or a new incident reignites the conflict. That is why I believe traders will react positively at first, but they will remain extremely cautious underneath the surface. The key issue here is trust. Can the shipping lanes remain safe? Can the military groups involved truly stand down? Can tanker traffic resume without interference? These are not small questions. Even one isolated event, a drone attack, a naval interception, or even a mining incident could completely reverse market sentiment overnight. That is how fragile this environment is. Investors know that one small disruption in the Persian Gulf can immediately bring back panic pricing in energy markets. Now let's connect that directly to gold and silver. If the market believes this piece is real, precious metals may rally because investors rotate into assets they believe have long-term value. But if the market begins to doubt the agreement, then gold and silver may also rally, but for a completely different reason. In that case, they would rise as safe haven assets. That means gold and silver may have something unusual working in their favor right now. They can potentially benefit in both outcomes. If peace holds, they may rise because capital rotates back into metals. If peace fails, they may rise because fear returns. That creates a very interesting setup. This is especially important for silver because silver has already shown investors just how volatile it can be. We have recently seen silver move several dollars in a single session. That tells us one thing clearly. There is enormous energy in this market. Traders are active. Institutional money is watching. Retail investors are paying attention. And whenever silver begins moving with that kind of energy, it usually means the market is preparing for a larger directional move. There is also a technical side to this story. Silver has spent a lot of time recently consolidating in a broad range. Markets often behave like springs. The longer they compress, the stronger the eventual breakout becomes. If this geopolitical headline acts as the trigger, silver could quickly challenge major resistance levels. Once those levels break, momentum traders often enter aggressively. That is when price moves can accelerate much faster than most investors expect. Gold may behave a little differently. Gold tends to move more steadily and with more discipline. It usually attracts larger institutional flows, sovereign wealth money, and central bank attention. If this agreement reduces short-term uncertainty while leaving long-term debt and inflation concerns intact, that is exactly the kind of environment where gold can quietly grind higher. It may not move as dramatically as silver, but it can create a strong foundation for the entire metals complex. So the market's first reaction matters, but the second reaction may matter even more. The first move is emotional. The second move tells us what investors actually believe. If gold and silver rise and hold those gains, that would be a very bullish signal. It would tell us the market is seeing beyond the headline and focusing on the bigger economic picture. That is what I will be watching most carefully. Let's talk specifically about price targets, because this is where investors naturally start asking the big question. How far could gold and silver actually move if this peace deal holds and the Strait of Hormuz reopens smoothly? My view is that the initial reaction could be surprisingly aggressive, not because fundamentals changed overnight, but because markets are heavily emotional in moments like this. When uncertainty suddenly fades, capital moves fast. Starting with silver, I believe it has the greatest upside potential in the short term. Silver has already proven that it can move rapidly when momentum appears. If confidence returns to the market and investors begin reallocating toward precious metals, silver could easily challenge the $80 level quickly. In fact, I would not be surprised to see a move into the mid-80s if enough momentum builds. That sounds dramatic, but silver has a history of making dramatic moves. Once traders sense a breakout, fear of missing out becomes a powerful force. Silver's unique strength is that it does not need perfect conditions to rise. It benefits from investment demand, industrial demand, and emotional momentum. If investors believe global trade routes are becoming safer, industrial demand expectations improve. If they believe inflation and currency risk still exist, investment demand improves. That creates a powerful combination. Few assets have that kind of dual support. Now let's look at gold. Gold is likely to move differently, but that does not mean it moves less importantly. Gold tends to attract the more patient money. Institutions, funds, and central banks often prefer gold because it is more liquid and less volatile. If this agreement stabilizes the region, gold may attract buyers who see it as a long-term hedge against monetary instability rather than a short-term crisis trade. That could push gold toward major resistance levels very quickly. A move toward $4,750 would not surprise me if markets begin believing that peace is genuine and durable. But investors should also understand that first-day reactions are not always the final story. Markets often overreact, then correct, then choose a direction. We could easily see gold and silver spike during the first trading session, only to pull back as skepticism enters the market. That would be normal. In fact, that may be healthy. A pullback after a strong move often confirms that buyers are serious. If metals can hold most of their gains after that first emotional reaction, it would suggest something much larger is developing. Another thing to watch is trading volume. If gold and silver rise on strong volume, that means conviction is present. It means large players are involved. If prices rise on weak volume, then the move may be more speculative and less reliable. This is why I always tell investors not to focus only on price. Watch the behavior behind the price. That tells the deeper story. There is also the issue of timing. Some major markets may be lightly traded because of holidays and reduced participation. That can exaggerate price swings. Thin liquidity often creates sharper moves than normal, both up and down. So if we see a large move immediately, investors should understand that part of that may be due to lighter trading conditions. That does not make the move invalid, but it can make it more volatile. What matters most is what happens after the headline fades. If gold and silver continue rising after the first wave of excitement, that would strongly suggest this is not just a news reaction. It would suggest the market is repricing the entire precious metals sector, and that could mean a much bigger move is only beginning. As we close this analysis, I think it is important to step back and look at the bigger picture, because that is where the real opportunity often exists. Headlines come and go, Markets react emotionally. Prices move sharply up and sharply down. But long-term investors understand that the most important question is not what happens in the next hour or even the next trading day. The most important question is what this tells us about the broader direction of gold and silver going forward. What this situation shows us is that the precious metals market is no longer reacting only to traditional safe haven logic. That old idea that war automatically sends gold higher and peace automatically sends it lower is becoming too simplistic for today's market. The global financial system has changed. Central banks are buying gold aggressively. Governments are carrying record levels of debt. Inflation remains a concern even when short-term pressures ease. Currencies continue to face long-term trust issues. All of these forces are creating a stronger foundation underneath precious metals, regardless of daily headlines. That is why I believe this possible peace agreement involving Iran and the reopening of the Strait of Hormuz could become a very important test for the market. If gold and silver rise even while geopolitical tensions ease, that would send a powerful message. It would tell us that buyers are not entering metals simply because of fear. They are entering because they believe the long-term case remains strong. That is a much more bullish signal. Now, of course, there is still enormous risk here. This agreement is fragile. It could fail tomorrow. It could fail next week. A single violation, a single military event, or a single political disagreement could destroy confidence immediately. If that happens, oil prices could surge back above $100 per barrel very quickly. Fear would return to global markets. Volatility would explode again. And gold and silver would likely react sharply. That is why investors need to stay flexible. This is not the kind of environment where anyone should become emotionally attached to one outcome. That is also why discipline matters so much. I always tell investors, do not make major financial decisions based purely on emotion or one headline. Use these moments to understand market psychology. Watch how prices react. Watch whether gains hold or disappear. Watch volume. Watch momentum. The market will tell us what it believes, and that is often more important than what politicians say. For silver investors especially, this may be one of the most exciting moments of the year. Silver has been showing us repeatedly that it wants to move. It has energy. It has volatility. It has attention. And if this geopolitical event becomes the catalyst, silver could surprise a lot of people on the upside. Gold may move more steadily, but silver has the ability to move dramatically when momentum builds. That is why so many experienced stackers and traders keep watching it so closely. My personal view is that the first reaction will likely be positive for precious metals. I believe gold and silver could both climb as this news gets digested by the market. Whether those gains hold will depend entirely on confidence. If confidence grows, this could be the start of another powerful leg higher. If confidence fades, we may see another sharp reversal. Either way, the next few trading sessions are likely to be extremely important. Let me know what your thoughts are. Do you believe this peace agreement will hold, or do you think this is just another temporary headline before more volatility returns? And more importantly, what do you think happens next for gold and silver? I want to hear your perspective in the comments because these are the moments where investor sentiment becomes very valuable. If you enjoy this kind of daily precious metals analysis, make sure you subscribe to Report of Silver. I work hard to bring you the latest news, market developments, and deeper analysis every single day so that you can stay informed and make smarter decisions. If you are watching on mobile, don't forget to hit that like button because it really helps the channel grow. Thank you so much for watching, and as always, I encourage you to rate, share, comment, and subscribe. Until next time, stay informed, stay disciplined, and keep your eyes on the metals.